You've probably seen a stock chart before. Maybe you've seen it while watching or reading the news. But if you're not someone who follows the stock market, all the graphs and numbers may be a little confusing. What exactly is causing these numbers to move around? That's what we're going to talk about today in this video. So, if you've ever wondered why these prices change, then you're in the right place because we're going to take a look and see what's happening behind the scenes of these charts. Let's get started. How are the prices of stocks moving up and down? Is there a machine on the stock exchange that randomly moves the numbers? Well, not quite. Some people might think that these numbers are randomly generated, but they're not being moved by a number machine on the stock exchange, roulette wheel, or a roll of the dice. Sometimes it looks that way, but that's the wrong way to think about it. And yes, there are people who jump into the stock market to gamble with not much knowledge of the market or maybe even with the belief that they have some kind of magic formula that's sure to work. But before you jump into the stock market, it's important to understand how it operates. Let's take a look at the same chart we showed earlier. You can see how ABC Company's stock price has moved over time. But to get a better understanding of how it moves the way it does, we're going to zoom in a little closer to find out what's going on beneath the surface. Here, we can see the stock price is $37.50. As you may have guessed, with every stock trade, there's a buyer and there's a seller. Whenever the buyer and seller agree to trade a stock, the price they agree to is reflected by the price of the stock, otherwise known as the stock quote. To get a better understanding, let's look at an example using our buyer and seller. Our buyer really likes ABC Company and is interested in purchasing stock, also known as shares, in the company. Our seller, on the other hand, has owned the stock for a while and is ready to sell. Our buyer doesn't want to pay more than $35 for the stock, and our seller doesn't want to sell it for less than $40. So because they both want different prices, the stock does not trade. But our buyer is very eager to own shares in the company. After thinking it over, he decides to agree to buy the shares for $40. The buyer comes up to the seller's asking price. He gives the cash to the seller, and the seller gives the shares of stock to the buyer. The stock price then changes from $37.50 up to their agreed price of $40. The graph of the stock price then also increases to $40 to reflect their trade of the shares. But what if it were the other way around? What if the seller agrees to the buyer's price instead? Let's go back to our example. Assume the seller doesn't think the company is a good investment anymore. So instead of the buyer going up, the seller comes down to the buyer to accept his price at $35. Similar to before, the stock price changes to reflect the trade. But this time, it goes down to the agreed $35 price. And instead of going up to $40, the line on the graph declines to $35 as well. If you noticed in our example, we only had one buyer and one seller. However, this isn't usually the case. There are often multiple people who also want to buy or sell a stock. And each person could change their mind on their price, or even if they want to buy or sell the stock at all. With some of the larger companies trading on the stock market, there are thousands, if not millions of shares traded every single day, with countless people entering orders at any given time. You can imagine how this makes it almost impossible to predict what the price of the stock will be at some point in the future. While it is possible to evaluate a company to determine if their stock has a good chance of being a good long-term investment, predicting what the price will be in the short term is very difficult. So if you hear someone tell you they have some crystal ball, get-rich-quick strategy that can predict where the price of any stock is going later that day, tomorrow, or next week, you should probably proceed with caution. And always remember, there are qualified investment professionals who can help you make informed decisions to invest your money wisely and guide you along the way. If you found this video helpful, feel free to share it with a friend and be sure to like and subscribe. Thanks for watching. And remember to invest wisely.